Hi, good day traders. Welcome to Trade City Academy and welcome to this video section. I remain my humble self, Prince Wee Jr. Now, traders, today I'm going to be talking about a very simple, profitable trading strategy that a lot of traders use. And at the end of the video, you should be able to start maximizing profit as well as improve your trading skills. But before we dive into the video section, please, I would like you to subscribe to the channel if you've not, as well as turn on the notification bell so that when new videos are released, you get notified. So stay with Tracity and stay with us while we ride the crypto market. Now, in today's video, I'm going to be explaining breakout trading strategy. Now, breakout trading strategy is a very simple as well as highly profitable trading strategy used by a lot of people. Now, people use it a lot to trade the market, both crypto as well as forex market. But before then, you will need to understand few things about breakouts. Now, when we say something broke out, what we mean is that thing has been head banned before. So you've been compressed before and you've been able to pull yourself out of that compression. So something has held you bound before and you've been able to pull out yourself. Now, what normally pulls you out of that particular thing that have held you bound is force. So breakout strategy comes with force. And the moment you've been able to break out of that particular zone or what has held you bound, you keep going forward and forward. So having understood what I mean by breakout, let's bring it back to the chart and the trading market. So now look at the market. Let me briefly explain what I mean. So let's say, for example, we had this market. So this is a candle. This is a candle formed. Now, this is another candle. I'm just going to use this to explain. This is another candle. Maybe this is another candle. Just bear with me. The candle might not really correlate, but I just want to draw this, then I'll go over to real life chart. So this is also another candle. Now, this is also another candle. And this is also another candle. Now, I wouldn't have time to start coloring the candle, but let's assume this is bullish, bearish in that particular direction. Now, before we go forward, I need you to understand that breakout has two types. We have breakout of consolidation, and we can also have breakout of support or resistance zone. But in this video section, I am going to be focusing on breakout of consolidation. So this is trading market. So this is a candle, this is a candle, this is a candle, this is a candle, and these are candles. So if you notice, these candles have been forming within this region. So the candles have been forming within this region. However, we cannot say this is a downtrend or an uptrend. So we say this is a consolidating market. Now, a consolidating market is a market that is just quiet. There is little or no momentum. So that means the market is not moving fast. So the direction, the distance between the highest point the market got to and the lowest point is not much. So we call it a consolidating market. Now, a consolidating market could be termed as a quiet market. So if you're using your Bollinger Band for indicator traders, when you have your Bollinger squeeze, you know that, okay, we are consolidating. Now, once we have the wide, a breakout as we call. So looking at this is a consolidating market because the market is just forming small candles. There are no big candles formed either to the upside or to the downside. So at that particular point, we say, okay, we have a consolidating market. Now, the moment you spot a consolidating market on your chart, what you need to do is to try and monitor it. So if you have sticky note on your laptop, you could just bring it up and you type it. So you can just bring up your sticky note. This is Matish USDT. So I'm going to be writing Matish against Theta. Now, what it means is I have spotted a consolidating market on Matish, but because I don't want to forget, I will use my sticky note to bring it up. So the moment I'm on my laptop, my sticky note reminds me I have a Matish chart to always look at. So I go back and I look at the market. So this is it. What do? You monitor. You monitor. Now, a breakout can occur either to the upside or to the downside. Remember, this is a consolidating market. So therefore, the market has been forming this. So this was a resistance, and this is also what the support. Now, a breakout can occur to this side, or it can also occur to this side. That's why you need to monitor it. Now, with your knowledge of chart pattern, a peanut, a rising wedge, a falling wedge, rectangle, all those things will help you to anticipate a particular direction the market should be going to. But I wouldn't be talking about chart pattern and all of that. So looking at this, this is a consolidating market. So what I need to do is I need to look or wait for a candle that will now form above this zone. Let me use, so this is it. This is an area of consolidation. So I need this candle to close above this area of consolidation. Now, the moment it's been able to close above these areas of consolidation, it means this candle has been able to break out of this consolidation zone. I'm going to repeat. Consolidation talks about a very quiet market. Now, when you have a quiet market, it means buyers and sellers are still deciding who wins the market. So there's little or no momentum. You just see market forming small, small candles. Now, what you should be doing as a trader, you now anticipate a particular direction, because what happens after a squeeze is a wide for Bollinger Band traders. Now, what happens after a quiet market is a loud market. What happens after a consolidating market is a bullish or bearish market. That's a broken out or broke-out market. So you're going to be anticipating that in your chart. So the moment you get to see this candle close above this zone, it means a breakout has occurred. So the moment that's closed above this zone, obviously this should be a bullish candle. It means this candle has been able to break out of this zone that has held it bound for so long a time. Now, what do? It means we are going bullish. However, aggressive traders will immediately place a buy order the moment this candle closes, thinking we're going to ride up. But conservative traders will have to wait for a possible retest, because it should come down to retest this zone and then finally reject it before going up. So when you're trading breakout, you don't just jump and enter the market the moment the candle has broken out of that consolidating area. You need to what? Wait for a confirmation, because at times you can have a false breakout. A false breakout is you're going to see a bullish candle close above this zone and you quickly enter, and the next candle you're going to be seeing will take you down as well as down to this other side. So you're going to go down like this. So this is a false breakout. It faked you out because you did not wait for confirmation. That's why conservative traders tend to gain and aggressive traders tend to lose a lot. So the moment you see this candle has broken out of this zone, all you need to do is what? Wait for a rejection. At that particular point, you don't buy high and sell low. Buying high and sell low will means you entering the market from this zone where it closed. And now the market will then come down from here to retest this zone. So the market will come down to retest this zone. Mind you, this has broken out of this zone, so there must be a retest. It has to come down to retest this zone. Now, the moment this zone is retested and rejected, you now need to know what about rejection candles and rejection pattern. The moment you spot that rejection here, it means, yes, we are going bullish. Now, if there's no rejection here, it can come down and see go down. Now, I haven't explained using this. Let's dive into the real life chart where I'm going to be showing you few examples. So, reminder, we have two types of breakout. We have breakout of consolidation and also breakout of support and resistance zones. Now, breakout can either be to the upside or to the downside. So you don't just limit it to either the upside or the downside. Now, let's go over to our chart. So this is a Martis chart. Now, first thing you need to know is for you to trade this strategy effectively, you must understand consolidation. If you don't understand consolidation zone, then you might not even be able to identify this. So we are going to be looking at this chart. I'm trying to spot a very simple consolidating area. So I will use for my analysis an example. So I'm trying to look for a very obvious one. I have seen one. So let me use this. So this is it. This is the area. So I'm going to take something like this. We can take something like this. Now, if you notice the highlighted part, this is highest point, this is another point, this is it, this is it, this is another point. So if you notice, This highlighted zone is a consolidating zone. This is not an uptrend. This is not a downtrend. It looks more like a ranging market, and we're having small candles, like I said. Now you can also research more about characteristics of consolidating pattern or angle. So what do you do? The moment I spotted this, I go to my sticker note if I'm a very busy person, and I put Matish. Now I can also put anticipating what? Breakout. So I know what to look at the moment I see my sticky note. So I'll go and put on it my sticky note. So I'll Matish. Now I'll be monitoring this. Now at this particular point, I wouldn't be too sure as a beginner if this market is going to come down or is going to go up. So I will be waiting for the breakout candle and look at it. What happened afterward? Let me zoom more. Now, if you look at it, this is what happened afterward. We had a bullish candle here and it closed perfectly well. There was no wick on this bullish candle. It is not a Marabozo because we have a small wick here. So we have a good bullish candle that closed above this zone. Remember when I was explaining it, this is the breakout zone. So we are waiting for a candle to close above this zone. Now, the moment this candle closes above this zone, I can now confirm that a breakout of consolidation has happened. However, what do I do then? I will now need to wait for a retest. Aggressive traders will immediately buy from this zone. That's this zone. That's where the candle close. So aggressive traders will immediately buy because they've been patient enough. Maybe they saw this breakout since on 15 minutes and they've been patient enough. So they will immediately buy. And after they bought, if you notice, price moved up to this particular zone. That's 0.42. It moved from 0.41 to 0.42 and fell back to this zone. So if you notice, like I said, you don't just jump into a breakout. You wait for a retest. Did the retest happen? Yes. This is the retest. So if you notice this red candle, let me zoom in properly so that we can actually take a good look at it. So this is the consolidating. This is the breakout candle. People rush to buy here, but this was not the best buying place or the best entry point. No, you don't buy high. Even though market will go high, don't buy high. You should be looking at buying at the best point. That's the best entry. Now, at that particular point, you don't buy here. If you bought here aggressively, you're on your own. Obviously, yes, you still make profit. But people who bought conservatively will make more money than you. However, how do they do that? You need to wait for a retest here. So you need to come and retest this zone. It might not be on this exact area, but give it a zone. So if you look at it, was there a retest? Yes, this candle came to retest this zone. So the moment he retested this zone, what did we see? We saw a big push up. We saw a weak push up. At that particular point, we say, yes, the breakout retest has been completed. However, let's now ride. So you can comfortably enter from here. Or if you know more about candlestick pattern, you still wait for a retest of this particular zone, which happened here. Then you enter from this. Now, the moment you enter from this, what happened? This was 4-hour chart. It went up and it also went up. Now, looking at your risk and reward ratio, if you know how to do that perfectly, you should be in profit, even though you're taking this trade on futures. So you should be in perfect profit. So let me try. This is my long position. So I entered from here. That's this candle. So I'm going to click here. Now, if you look at it, it got to this particular zone. And my stop loss would have been somewhere below this. So if you look at it, look at the rate. We have what? 16% over 9%. So my stop loss was 9%. And my take profit would have given me 16%. So it's a very profitable trade. It's a very profitable trade if I was taking it on futures. Now, if I was taking it on spot, I should be thinking of if I'm holding for long or I'm just trading my spot trading. So I'll quickly sell. Now, for me to know where to sell, I need to also go back to previous price history, of which I will not explain in this video, to determine your sell areas and your buy areas. So if you look at it, go to this point, you should also know that market does not move in one direction forever. Now we came back, had a pullback, had another retest. Now there was a confirmation of the retest with this candle that is a bigger hammer. So you can't really call this a hammer because if you look at the wick, this would have closed somewhere, but it looks like a hammer. So let's use the word looks like a hammer. So occurring here gives us another confirmation that, okay, this zone has also been retested and rejected. And if you miss this trade, you can now enter from here. And if you look at it, it went back up, came back, and it went back up here. So if you look at it, this is breakout of consolidation. So the moment you spot a consolidating market, you should be thinking of placing a buy or a sell order the moment the breakout candle has occurred. Now, let me try to see if I will spot any other example. Any other example. I need simpler example. I'm seeing a lot of them on my chart. Okay, we've talked about bullish breakout. Let's also talk about bearish breakout. So if you look at this, this is our consolidating market. This is our consolidating market, this highlighted part. So if you look at it, this is the highest point, this is it, this is it, this is it. It's been consolidating for a couple of times and hours. Now, what did we see? We saw a bearish candle closing above or below this zone. So it closed below this zone. You must take note. You don't read a breakout with the wick. The wick is invalidating a breakout. So if this candle did not close here, then it is not a breakout candle. If it's a bullish candle, it must close above. We know about candle open and close. You don't judge it based on the wick. So if you notice, this candle was able to close above this zone. Obviously, it becomes a breakout of that particular consolidating area. So what you should be looking at for is a retest and rejection. But unfortunately, there was no retest of this particular zone. So it does happen. That's one thing you need to know. At times, retest does not even happen, and the market will keep riding down. Now, we're supposed to expect this to come and retest here, then before going back down. But unfortunately, there was nothing like that here. And the next thing we saw was another bearish candle, some bullish pull off, and then we went back down. So at times, retest does not happen, but you need to look out for perfect entries. Now, we're going to be talking about time frame analysis and strategy, whereby you need to look out for this on 15 minutes. The retest must have occurred on 15 minutes, and you quickly ride from there. But I'm not going to be talking about that in this video. So if you notice, if you've taken your short position on your future trade, you're taking your short position the moment you saw this. So this is it. I'm going to put my Excel here perfectly, because anything above this means it's invalidating. However, some persons will want to minimize their risks and will bring their Excel here, which is still okay, depending on your account size and the risk you can accommodate. And let's see where the market got to over a period of time. It went back as far as this. So if you look at it, we have 11% as against 23%, which is also a good trade to take. So if you look at it, once there was a breakout, a retest and rejection did not really happen, but the market still went back in that breakout direction. So these are simple strategies you can use. Let me see if I can have something on the BTC chart. Now, this breakout strategy is not just limited to any time frame. You can trade breakout on 15 minutes, you can trade it on 1 hour, you can trade it on 1 day, you can trade it on any minute, anytime you want. So you don't restrict it to any particular time. Now, you should also be aware of what? Of fake out. Because if there are breakout, then there might be fake out. Now, let me quickly explain one of those fake out for you that happened yesterday on the BNB chart. So if you look at it, you can say, okay, this is an area of small consolidation. So even though you were taking it, let's say some persons will want to take from here as the area of consolidation. Some beginners who might not really know how to draw this will now say, okay, I am not taking this, I am taking here as my area of consolidation. And then what happened? We saw this candle. So if you've taken this area, that's why I say you need to know consolidations, characteristics of consolidation, and how to perfectly identify it. Now, if you've taken this area as your area of consolidation, this is 15 minutes. What we saw a big bullish candle that closed above this zone. Obviously, people who did not wait for a retest lost a lot of money. Now, the retest must happen and there must be a rejection before entering. This was a retest, the next candle. If you notice, there was no rejection here. It broke down here. So at that particular point, you stay off. So at times, fake out does happen, both in the upside or to the downside. So you can also trade on it on 1 hour and try to identify this simple trend. You can also look at it on 1 day and try to identify these things too. So if I switch my chart on 1 day, BTC 1 day, you're going to be seeing here. Let me see if you have any breakout on Cardano, on the daily chart of Cardano. So if you look at Cardano, this is not really a breakout. Was it Matish? Let me see if we have anything on Matish on daily time frame. Okay, we don't really have anything here currently. So you can also use your daily time frame to trade your breakout strategy. So a breakout can occur either to the support side, that's the downside, or to the upside. Now you must note that a breakout needs to be confirmed before trading it. You don't just enter a breakout the moment it happens. Wait for a confirmation, let it come back to reject it. That would be the perfect way. However, sometimes there might not be any rejection. So you need to also look out for perfect ways to enter the market, even when there are no rejection. Always stay safe and stay profitable while trading. We can go ahead and backtest this before going live with it. Please, we advise you backtest it. Try it 1 or 2 ways. Use 1 or 2. You can use some weeks. You can use 1 month. Try to analyze it. Use it alongside other trading strategies. Get confirmation before you trade it. So thank you for your time. Thank you. And I believe you enjoyed the video. Please don't forget to click on the subscription button. We need your subscription and we need more subscribers. Thank you and stay tuned to Tricity Academy. Have a nice day.